Cash is debt. There's no difference. If you're holding cash thinking that you're going to save your way to wealth, you're making a big mistake. Historically, the property market goes up by 7% a year. That outperforms inflation. People have to have a house. You're always going to be able to find someone to rent the property. And if you want to sell it, there'll always be someone there to buy it. The big banks, they're just a whole bunch of home loans. Welcome to the Passive Property Investor Podcast, where I teach you how to stop trading your time for money with property investment. I'm Jerry Parker, your property investment consultant. Let's dive in. Hello, passive property investors. Welcome to yet another episode of the Passive Property Investor Podcast. Today, I want to talk to you a little bit about this problems that I see with people that I'm speaking to, and it's about building wealth and how are you going to build wealth. And you know, a lot of people want to save their way there. They're saving their money and they want to get there. They don't want to go into debt. Their parents told them, oh, debt's a horrible thing. Don't go into debt. You'll go broke. Don't do that. You might go broke. And save your way, save your money, look after your pennies, and your dollars will look after themselves. And I just want to tell you, cash is debt. There's no difference. It's debt. If you don't think it's debt, well, look at the inflation rate. That's the equivalent of an interest rate, is the inflation rate. Since the government started printing money, all money is debt now. It's not gold. Gold is the only thing that's not debt. So if you're holding cash and thinking that you're going to save your way to wealth, you're making a big mistake. You need to own assets to build your way to wealth. And you need to buy these assets. You need to be an investor. And there's a lot of choices in Australia. You know, we live in this very wealthy country. It's a fantastic country. And there's a stock market. You can invest there. And what's that about? It's got powerful companies there, big resource companies, the BHP, and they're digging out of the coal and the iron ore, and there's a huge amount of wealth that they're making, exporting that all over the world. And there are countries like India, China, Japan, they're buying all Australia's resources, and they're on the stock market. You can buy right into that. But there's something that, you know, in my experience, hasn't worked out as well as other investments. It's like, who's controlling this? It's the stock market is just up and down in Australia. It generally goes up, but it's not that much under control. And you're sort of waiting for these big commodity players to buy more coal. So it's subject to the commodity market of the whole world, which is the most volatile markets in the world. So it's a good place to invest, but it's got that volatility that I've never made money there. That's why I say that. You know, I've just never made that much money there. And now I kind of look at property and I go like, you know, property's kind of under control in Australia. You know, essentially the big banks, they're just a whole bunch of home loans. That's all they are. The four big banks, it's just mainly home loans, and they are under control. You know, your deposits are guaranteed by the government. So they're guaranteed by the government, and there's a monopoly of them. So they're strong, and they're going to keep lending that money out to support the property market, because it's like it's almost too big to fail. So they're not going to let it, you know, drop off. And government policy does this as well. It's okay. Interest rates have gone up now to slow the economy down. But if the property market starts dropping, I tell you what, they'll put them right back down again. They're not going to hurt the property market. And other government policy is also bringing in immigration, you know, bringing in more immigrants to, you know, supplant that export market of the coal and iron ore. Those are kind of that's the big picture of why I like property. And it's a great train to jump on, because it's, you know, sort of semi-guaranteed by the government, and it's going to keep going up. Big picture, I like that. On the smaller picture, real estate is intrinsic. You can touch it. You know, it's there. And you can own it directly. You know, and you can completely control it. You get the tax incentives from the government. You get to depreciate them, and you get a capital gains deduction, you know, 50% deduction on your capital gains after owning for 12 months. You get that. And it's people have to have a house. They have to have a place to live. So you're always in demand. So you're always going to be able to find someone to rent the property. And if you want to sell it, there'll always be someone there to buy it. Different from the stock market, it's a little bit of a higher transfer cost of selling the property than the stock market. It takes a little bit more time, costs a bit more, but I think the benefits overweigh that. You can get a margin in the stock market, and they might give you 50% margin on buying your stock, but then if the value drops, they'll sell you out straight away. Go to the property market, the banks will give you 90% of the money to invest. You don't even have to use your money. So, you get to own more assets faster that way. Historically, the property market goes up by 7% a year. For the past 50 years, if you calculate, it's about 7% a year, it goes up. And that's very consistent. And that outperforms inflation. So it's a great inflation hedge, where sometimes in the stock market, some shares are not, inflation hurts them, but it's a great inflation hedge. So these are some of the reasons why, as for us guys, passive property investors, this is what's holding us here to want to keep sticking with our vision, sticking with our goals of building our portfolios, and feel secure that you're going to be able to get ahead this way. It's not something no one's going to pull the rug out from under you. Just stay on train and it'll keep happening. See you next episode. Thanks for tuning in to The Passive Property Investor. If you enjoyed this episode, the best way to show your support is to give a 5-star review on Apple Podcasts and Spotify. Make sure you subscribe to the YouTube so you don't miss a single episode. We're on all social media platforms, so feel free to connect with me there. And if you're having specific problems making your first investment or building your portfolio, maybe you don't know which location to invest in, how much you should invest, you're worried about who to trust, reach out for me down below. I will have the answers for you. Don't hesitate. See you on the next episode.